Okay, now that's a bunch of ideas, trading ideas to work with. Now let's get you some fundamental analysis of what's going on. We've had a result season that's just ended and a massive banking reforms that was announced on Friday. And of course, we have the contract also that will end in a couple of weeks. So Ajay Bodke of Prabhudas Leeladhar joins us to give us some fundamental trends that he's spotting, and Siddarth Bhamre is joining us for the F&O space. Gentlemen, good morning. Thank you very much for joining us. Well, Ajay, you were with us when the banking reforms were being announced, and you were quite elated by some of the announcements. The markets have played out a goodish bit yesterday. Do you think that there is still legs for more in the PSU banking space?
Good morning, Lata. I think, as I mentioned on the day the reforms were announced, that the valuation gap between the private sector banks and public sector banks had considerably increased over the last year or so, and hence the announcement of reforms was expected to give the market was expected to give a thumbs up, and the gap I expected to narrow down. And I think over the last couple of sessions it has played out exactly the way I had envisaged. I still feel that the rally has some legs to go, and especially in some of the stronger banks. I think although Bank of Baroda has seen an extremely strong rally, I feel that State Bank of India, I think, has seen comparatively a very subdued rally as compared to Bank of India, PNB and Bank of Baroda. So I personally would feel that SBI, with a medium-term perspective, offers a very good entry point. Also, in case of other banks, I feel that I think one of your previous panelists was saying that the retail-focused banks should be the focus of the market. I would respectfully disagree there, because I feel that any fall in interest rates, if it were to happen over the next in the medium term, would benefit the public sector banks because of the large SLR book that they have. And secondly, any improvement in the NPAs, incrementally the market would tend to focus on the corporate focused banks. So banks like Axis Bank, Yes Bank, ICICI Bank, in my opinion, would in the medium term give better returns as compared to the retail focused banks, which has become a more consensus buy. Today, if you look at any institutional investor in his portfolio, you'll have all the retail focused banks, and they have given returns between 35 to 70% over the last 1 year, whereas the corporate focused banks, which I just mentioned in private sector, have given comparatively far lower returns. So I think from this perspective, I would be slightly contrarian and look at the corporate focused private sector banks and some of the PSU banks.
Alright, so SBI is the top pick in the PSU banking space. That's the word coming in from Prabhudas Leeladhar. But Lata, it's interesting. Yesterday we had a big move come in on names like Bank of Baroda, but SBI did not have so much traction.
Actually SBI is already a very strong bank. Yes. I don't think there are any brokerages out there which have a sell on SBI. Even at the worst of times, it was all the private sector banks, or many of the private sector banks and SBI that people would bet on. As well, corporate governance is much stronger at SBI. SBI is governed by the SBI Act. It doesn't come under the Banking Regulation Act. And traditionally, it is much less tampered with than other banks. You don't talk down to the SBI very easily. The quality of personnel, the quality of due diligence is respected across the banking sector when the diligence has been done by SBI. So actually it never went down so much. It was always trading very often above one time book, very often. Most of the other PSU banks trade even less than half times book. So it never got such a raw deal. It is inherently a stronger bank, and even if you look at the capital as a percentage of total stressed assets, SBI comes in looking the strongest. So obviously it therefore had much less legwork yesterday when the good news filtered in.
Okay, but Ajay, I just wanted to ask you specifically about BOB. I know you mentioned SBI as your top pick, but for BOB now you have high pedigree private sector candidates, like Jay Kumar, Ravi Venkatesan, that will join the ranks. How much of that good news is already priced in, and what does an investor do with that stock now?
I think a large part of that, in my opinion, has already been factored in. You've already seen a massive rally from 140 to the current levels. I think the market should digest the rally that has already happened. Wait for these gentlemen to join in. Look at what kind of strategy they roll out for the bank in the medium term, because they got to take along the entire management of it's a large bureaucracy out there. along, align the interests of the top management with the rank and file in the bank, and sort of wait. The market ought to give them also a reasonable time of at least a year or two. And then sort of one can start looking at the improvement in the various parameters that the finance ministry is asking these banks to achieve. So I think, in my opinion, a large part has already been factored in.
Okay. What about other banks? I mean, would you give a little more strength to, say, a Bank of India or a Canara or a PNB, any of the others where you still think there is a valuation gap to catch up?
I think there is, in my opinion, there is a scope in some of the names that you mentioned for the valuation gap to catch up. PNB sort of stands out as one bank among the three that you mentioned, but there is still scope for a valuation gap to catch up.
All right. Okay, we'll do one thing. We'll take a break. We'll come back. We have lots of questions for Siddarth Bhamre as well. We also have the pre-opening rates in a minute when we come back.
CNBC TV 18, celebrating 15 years of leadership.
Welcome back. All right, it's just about 10 seconds for the markets to open, so let's ask our guests to stay on hold, and we'll try and get the opening rates. We will not get any rupee rate today. Markets are closed for Parsi New Year's Day, but the opening ticks are coming a little positive. Don't go by the Nifty just yet. It's 0.5% higher. The Sensex is plodding on, but even if you look at the Asian handover and the Wall Street handover, we should have at least a green start, and as Sonia has been pointing out, the lower crude prices also would work to our advantage. Compared to any other emerging market, it would be an added advantage for us. So there should be a green start. I think we will leave it at that at the moment because there are some outsized gains in the Nifty and practically nothing at all on the Sensex. So the rates quite clearly are at the moment a bit unreliable. Maybe we come back to them in just a bit. First, let's invite Siddarth Bhamre into the conversation. Morning, Siddarth. How would you trade the Nifty today? It looks like a green start is assured. That's the only thing we can say as of now.
Good morning, Lata. We are not very, optimistic on Nifty or Bank Nifty as such, and we are seeing FIs unwinding a good amount of their long positions in yesterday's trading session. Even in put options, if you see, we saw 8500 put reducing open interest, but more importantly, even 8200 put option has seen some reduction in open interest, and some call writing is visible in higher strike price call options. So that doesn't make us very optimistic, and we still shy away from making any meaningful trade in Nifty. But we have been active in Bank Nifty since last couple of weeks.
Okay, that actually is the place to be. So I'm going to ask you about that in just a bit. Before that, a couple of observations. One is on Infosys. That stock is moving up higher. Remember, BNP Paribas has raised their target price on Infosys after meeting with the CFO. So their target price now stands at 1320 versus 1200 earlier. So Infosys is moving with some strength, and the PSU banks continue to move higher. So Bank of Baroda, SBI, PNB are all up in the green by about 0.5% to 1%. But Siddarth, hi, morning. You have a couple of stocks. As you said, you have a strategy on the Bank Nifty. Take us through that.
Good morning, Sonia. So last week we mentioned a long triangle, and we were anticipating that this narrow range which Bank Nifty was stuck into 18,800 and 19,100 would breach. It did breach on the lower side, and within 2 days that strategy yielded decent money. Now what we are seeing is that Bank Nifty is back into that side, that range. This PSU bank story, if you take recent examples of what has happened in market, you have Infosys story where there is change in management, and you saw short-term returns given by that stock, and then one side you had the story of 100 cities and stocks going up significantly. I think this PSU banking story is not an infi story. It is more about that 100 city story, and it's not going to materialize so soon. If you look at Bank Nifty, there is no addition of long positions in Bank Nifty index. If you see SBI, there is no long position added. Barring stock like Bank of Baroda and Union Bank on Friday, we saw some long positions getting added over there in Bank of India. Otherwise, yesterday also, if you see, there is not much of long position getting added. By the way, not more than 15% of weightage in Bank Nifty is for PSU banks. If you look at private sector banks, there is weakness which is seen in Axis Bank. ICICI Bank has gone mainly because of short covering. HDFC Bank is in a range. So what I'm trying to say is that your previous speaker mentioned technical that private sector banks would play a catch up. I beg to differ over there. I think the weakness in private sector banks would continue, and this would pull Bank Nifty further down. So I am suggesting that one should buy 18,700 put option in a range of 150 to 170. Yesterday's close is around 195. Today, if you get a small uptake, or say by tomorrow, you will get this put option at 150, 170 between this range. You go long, and I'm anticipating Bank Nifty to correct further.
All right. Point taken. Let's get more stocks and trends from Ajay. Ajay, we had these high flyers, the Punj Lloyd, the BEMLs, several stocks that ran up and then got punctured by their results when they were announced. Is there anything you will pick up from the rubble?
I think in case of capital goods and engineering in particular, I am very positive because Lata, we track some of the high frequency indicators and longer term indicators, and just 2 or 3 quick points I'll share with you. I look at the capital expenditure numbers put out by the government on the plan side every quarter, and there I think there's a 38% improvement at 31,000 crores for the first quarter vis-a-vis last year, and the revenue expenditure on the plan side is down 6%. So fiscal consolidation is progressing quite well, and railway the first quarter has spent the railway capital expenditure soared 134% to 17,700 crores in the first quarter. And in the road sector, till July, I'm looking at the numbers, 48,000 crores of orders have already been given out by NHAI. So if you look at the thrust of front-loading capex in railways and roads that the government had initiated in the budget, the numbers clearly bear it out. And we have seen 39% increase in the indirect tax collections in July, as the FMS said. So overall, I think, when I heard the commentary by some of the capital goods companies, there is a clear visibility of green shoots in certain sectors, and hence companies like Sadbhav Engineering, companies like Cummins are sort of, in our opinion, offer very good entry points if one takes a 1-year perspective. Also, I think on the water space, I think we believe that there is a company called Vatek Babag, where again sort of one can look at with a medium-term perspective. And of course, Larsen & Toubro continues to remain among the top buys. So I think these 4 companies I would recommend investors on the fundamental basis with a medium-term perspective.
Okay, so that's the capital goods and engineering space. What about the auto space, Ajay? Because even in trade yesterday, we saw a lot of auto stocks, whether it's Ashok Leyland, whether it's Amara Raja, SEAT, all of them hitting fresh highs. What are your top picks in that bracket?
In autos, our preference continues to remain with passenger vehicles. we are not so positive on the motorcycles because one is clearly seeing a continuation of weakness until such time the rural demand picks up, which we believe, I think, post-harvest one can revisit. One should remain overweight on the passenger vehicle side, and Maruti remains our preference there with a medium-term perspective. On the commercial vehicle side, again, one is clearly seeing continuation of strong numbers, and hence the buoyancy one is seeing in Ashok Leyland clearly is attributed to that. We believe that the second quarter numbers also will continue to be strong on the Ashok Leyland front. Now Tata Motors also sort of, with a very long-term perspective, people are sort of, in an accumulation mode. However, there, till such time that one sees some sort of semblance of stability return to China, I think I would be worried in rushing in and buying in Tata Motors immediately.
Okay.
So that's the stance. And in case of Motherson Sumi, I think one of your previous speakers spoke. One has seen a very sharp fall from 395 levels to around 340 levels. The company numbers were quite in line, I think, in fact. And hence, I think one should look at Motherson strongly with a medium-term perspective. Bharat Forge continues to remain a very strong buy for us.
All right. We'll come back to you with other themes. Siddarth, a couple of stocks that Ajay spoke about are on your list as well. Let me start with Tata Motors.
Yeah, so I agree with him that, from a long-term perspective, one should not rush in at this point of time, and we hold the same view. But you are seeing that most of the weaker stocks, like even metal stocks, are bouncing for various reasons. And this buy call on Tata Motors is purely from a very short-term perspective, and our target price, which is around 371, shows that it's from a purely bounce-back perspective. I won't suggest investor to buy at this point of time. So what we are observing is that last 2 days, despite volatility in market, the stock has been stable and seeing buying at lower levels. There has been a lot of short positions standing in this. I'm expecting some short covering, if not all, to take this stock higher. Fix the stop somewhere around 343 and go long and trade with positive bias.
Okay. Well, I just want to pull up a couple of these coffee related companies. All of them are higher this morning. Tata Coffee is up by almost about 7% odd. Some of these tea stocks are also doing well. The names like Harrison Malayalam are up almost about 10% odd. Jayashree Tea is up about 3-4% odd. The government has been mulling 100% FDI in the coffee sector and in the rubber sector as well. So the DIPP has finalized a note on allowing 100% FDI in the rubber and coffee sectors. How would you read into this news flow, Ajay, and anything interesting in this space that you like?
Unfortunately, we don't track the space, so it will not be appropriate for me to comment. But the news, as you've just mentioned, I think, sentimentally it's very positive, allowing 100% FDI in rubber plantations, in coffee plantations and tea plantations.
Okay. Any urban consumption theme that you want to play, Ajay?
I think on the FMCG side, the valuations are making us extremely worried. I think a company like Britannia, I think, has had phenomenal performance. Quarter after quarter, it is beating the market expectations on the operating margin front, the cost control that it has achieved, the new product launches. But at 3,300, I think at 600 rupees, we had first recommended the stock around a year and a half back. And now I think, we are sort of, very cautious on the valuations front, and that's true in quite a few stocks in FMCG space. So I would sort of tend to be very, very worried of plunging into FMCG stocks at the current juncture till such time that I see some meaningful correction in these names.
You are a rich man, Ajay. You can have your cake and eat it too, as far as Britannia is concerned. Thank you very much for joining us with all those picks. Siddarth, we still have to discuss your Crompton Greaves strategy.
Yeah, Lata. So this stock is a mid-cap stock, but fairly liquid in F&O space, and we generally see longs also taking place and shorts also forming. In recent market volatility, stock did correct it, but we didn't see any formation of short positions. And when stock is bouncing back, we are seeing a formation of long positions. Also, technically, if I add a bit, it is into ascending triangle, and we are expecting breakout to take place, and with formation of long position. We have aggressive target prices in this counter. But for time being, I'm expecting probably bounce back to 205, 206 can happen. Fix a stop around 179 and go long.
Okay, Siddarth, thanks for giving us all those ideas. And the market, by the way, in pre-opening has settled higher. So it's taking cue from the positive US market momentum that we saw overnight, the fall in crude prices, our own markets as well holding up above that 8,500 mark. Let's see how it lasts.